For the first couple of years, I was making the same mistake that destroys most traders' accounts. I would see price tapping my level, I would have some sort of fair value gap, support, whatever it was, I would immediately jump in, and this one mistake costed me thousands of dollars before I can even fix it. So I kept trading off of incomplete information. I was trying to predict what the market was going to do instead of waiting for what it's actually doing. And then I learned one simple rule that changed everything for me. I never enter NQ and ES without the market showing me where it actually wants to go. Not what I think it's going to do, but what it's actually showing me. This isn't actually about waiting longer. It's going from being a predictor to an observer. And once you understand this, your trading will never be the same. So in this video, I'm going to be breaking down what I actually wait for before I enter every single trade. My 3-step confirmation and how you can use this every single day to stop getting stopped out. So without further ado, let's hop right into the video. So I'm probably going to be calling a lot of people out, and just in the comments, you can say, yes, this was me, because I've been through the exact same boat as y'all. So when I'm seeing this sell side low here, for example, right, I want to see this low get taken out, and then immediately I can look for some sort of entry after this because I'm waiting for a trade. Maybe we have some sort of higher time frame gap. Maybe we have buy side liquidity up here. And now me as a trader, I'm itching to take a trade off of this long because I could catch a huge reversal and all this stuff. And I know probably a lot of you have felt the exact same way. So let's just say we finally sweep out this low and we start to see some sort of move out of here. So let's just say we jumped into a longs here, put the stop at the low, and then immediately after doing that, we get stopped out. And so now we get stopped out and we start to see the market kind of chop back up higher. And so we're like, oh, let's jump back into longs. I was just a little bit early. So we target the high, stop at the low, and then you kind of start to see this chop in the range here. And now you're trading into chop. And as traders, we don't want to be in this chop. So one thing we need to understand is probably it's going to manipulate us out and then start to actually move to the drawn liquidity. And the whole point of this model of what I showed you here is because as traders, beginner traders, or traders who are just learning, we are so scared to miss this big move that we'd rather jump in early, get stopped out, try it again, jump in early, get stopped out, just to still miss the big move because you're so scared to actually miss the move. So understanding this, we need to be cool, calm, and collective when we're trying to wait for price, because as a trader, we need to be observers of what price action is actually doing, what it's showing us, and how we can use this information to our advantage. And a lot of the problem is people are just too zoomed in on what is actually being shown here. So like you could have the right idea, but we have to understand what part of the model we are in. So if you're too zoomed in and you're looking for some sort of move here after we just dumped, we swept, we need to accumulate for a little bit. We got to understand what side of the market we're on. For example, it would be a market maker buy here. So we're understanding that this is now the drawn liquidity, and we need to step away, zoom out a little bit, because we're just too zoomed in on trying to catch the perfect entry that we're obviously just going to get stopped out. And so actually looking at this, we need to understand and have confidence with our entry model. We need to see some sort of inversion, some sort of sweep of liquidity, manipulation, tapped into a higher time frame gap, change in state, all this stuff. We need to have confidence that we know this model works so we can actually use it, because obviously if you have the buy side of the curve here, you're going to have sell side of the curve. So you need to understand what state are we at, and just obviously we're too zoomed in. So I'm going to jump into more examples here. I'm going to draw out a chart, and you as a trader can try to read it, what it's going to do and what to actually wait for. So let me just jump into these examples. Alrighty, so what we have here, we can see we just swept some sort of sell side here. We have manipulation, and obviously we tapped into some sort of higher time frame gap that is obviously we think is going to hold us up, right? So as traders, we look for our entry model. Say we have an inversion here. Let's just say we have a change in the state up here. And now obviously this could work, right? We could have this stop at the low here and then target all this high, but this doesn't validate the actual model we're in. So we can understand that, yes, it could want to go to this high. It obviously doesn't matter because we're so zoomed in that it doesn't want to target the buy side liquidity up here, the external higher time frame draw, right? So we need to understand is we're so zoomed in, we got to understand maybe this change in the state here, right, wants to go to this high. And maybe once we get up to this change in state, we now want to target this high. So we have to understand just because we get this time frame change in state doesn't mean we are going to move all the way up to this external buy side liquidity, right? Because we're just too zoomed in. Once our higher time frame aligns with our lower time frame, we can actually use that to actually take bigger entries, have massive trades, better RR trades, and just higher win rate overall because you're taking more high probability entries, right? Because there are many scenarios on what this situation could happen here, right? We could easily have this buy side up here. We're too zoomed in. This looks good. We're praying that it comes up to this high, and it could easily just stop you out here, right? Or it could have another option where it comes up to here, builds, sweeps, you're happy, you're whatever, you think it's going to work out for you, but then it's just going to start to build price action here, accumulate, and then manipulate you lower just to actually start the higher time frame trend here. Because if you zoom out of this looks a whole lot better with this sweep of liquidity here, right? With this manipulation, and now you're starting to see some sort of move up higher because we're so obviously bearish. So if you have a big bearish trend move, you don't want to be taking intraday 1 minute change in the states all the way to a 200 point draw on liquidity, right? We need to have our higher time frame start to develop so our lower time frame can actually have confirmation, and that's when you look for your entry, right? And so I get this question asked a lot, and like, what time frame am I on? What time frame am I looking at? And this doesn't matter as much as people talk about it. Time frame alignment isn't some huge thing that's going to save you. So like if I'm looking on the 30 minute, I'm not going to have to take a trade on the 5 minute. If I'm looking at a 15 minute high, I'm not going to have to take a trade on a 1 minute, right? So understanding this, because all price is completely fractal, right? We look on the lower time frame, or we start on the higher time frame and work our way down to the lower time frame, because at the end of the day, we're all going to hit the same draw on liquidity. The buy side is going to get swept at some point of the day. So you don't need to actually have time frame alignment because it's all going to the same place either way, right? And one thing that actually matters is displacement. Displacement is something, the reason why you could be getting stopped out, then you have some sort of displacement, and it has to be aligned with the model you're actually trading, right? So when you have some sort of displacement, let's say lower, for example, we need to understand, what is this move actually moving to? Why is it going there? And we can understand with this information of displacement that we have, we can use it for our advantage. We can sharpen our edge when we're actually looking for a trade. So like in this scenario, for example, we have displacement lower sweeping out this. And now obviously, what can we see on the higher time frame? We swept out, we manipulated another low. We can obviously look, maybe we want to go higher, right? Because our higher time frame narrative, our model actually aligns with it. Because in order for me to have confirmation that we actually want to be going higher here, for example, is I want to see these highs get taken, right? And then I want to see price still displaced to go higher. So I want to see price continue to move higher, even though we swept this buy side liquidity here. So understanding this, we can actually then look to have some sort of confirmation on the lower time frame to actually take the entry. Because if I'm looking for some sort of entry, right? Maybe we have some sort of change in the state here. We can understand that this is a price that is holding us up. This is the reason why we're starting to move in the opposing direction. And maybe we have some sort of gap here on the higher time frame. And maybe we obviously want to see some sort of pullback. And once we get this pullback, we could obviously zoom in. So let's say this move technically hasn't happened yet. We want to see some sort of move back inside of this range, and we could look for something out of this, right? Say we're building up, we sweep this low, and then obviously we could look for something here to actually place a trade, because understanding if we wanted to take a trade here, this is more like gambling. We're trying to bottom tick the market, and obviously that's so much harder. It's lower risk to reward, but overall, you don't want to be doing that. You want to wait and not try to predict what the market is doing, right? So understanding this, actually waiting for the displacement move to go higher, this is one key that actually saved my trading, and just waited patiently for the actual move to verify it's going with the higher time frame model. So we're watching price here, right? We see we have this sell side liquidity here. We obviously have higher time frame gaps that we could deliver out of. Let's just say we have this 15-minute gap that's right now in this range. And obviously, if we wanted to take some sort of trade, let me just mark out this. Maybe we have some 5-minute gap here. Let's just mark out this 5-minute gap here. And so if I were to jump into a trade early, right, I'm obviously going to get stopped out, because this trade is just building liquidity, slowly chopping up, and ultimately generating liquidity. So what are the 3 reasons markets move? Generate liquidity, hunt liquidity, and rebalance to equilibrium. So understanding that, we actually have to verify on when to actually take a trade. So understanding this, okay, we have manipulation at the high. Why would this not be a smart trade to take? Because we have no displacement yet. We have no confirmation to actually take a trade. We see all this liquidity being built up here, right? But we have no way of actually taking this because this could easily just continue to slowly chop its way up higher, right? So we need to see some sort of displacement move that actually matters to us, that actually gives us some information that we want to move lower. So we're getting the move up higher, and then we get a change in the state here. And obviously, as traders, we start to see the move lower, and we're so scared of actually missing the trade that it's not obvious that this wants to be taken just yet. So yes, we do get a change in state, right? But if you throw your short position in after the close here, right? Stop at the swing high, then target the below or whatever you want, then you're going to watch this trade just completely go against you because you didn't wait for actual clear displacement. Now here, if I was a trader and I was looking at this chart, for example, here, I would look, okay, so we have swept this low. I want to see clear manipulation that we want to start to go lower now. So we have actual manipulation here, a clear sweep, and now we want to see some sort of confirmation at this change in the state that we do want to move lower here. So we're waiting. We get the displacement here. We also have a change in state, retest of this inversion. And so now obviously you could look to take a trade maybe when you get another close down at the change in state here. So obviously you would wait for that. And then let's say you enter shorts here, stop at the high because we waited patiently. We swept out a high. We can see clear displacement finally sweeping out. Understanding that why did we sweep this high is because we're generating all this liquidity here, right? We want to see all this get swept continuously without any problem. And we need to understand what side of the trend are we on. We are on a market maker sell model because we are trying to sweep down at this external low. So understanding this, we can use this for confirmation that we have some sort of model that we align with. And once you take this trade, you could target the sell side low here, and you could ultimately wait on your trade here. And then there's your displacement lower actually happening. So understanding this, and as a trader, if you jumped in just because we tapped maybe this higher time frame gap, we got a change in the state, there's no confirmation that we want to move lower. We didn't sweep some sort of low that we have displacement. So for example, we swept this internal low here, right? We actually got displacement higher, manipulated this high, and then now you're starting to see it displace lower. If we wanted to actually continue higher, and as a trader, you need to use this information here, right? If we wanted to see the sell side get swept and actually continue to move up, then you would want to see a stronger move coming out of this, but we didn't. We saw this get swept, manipulated this internal high, and now you're wanting to see some sort of displacement lower here, right? So understanding this, you need to have a stop at a good spot. And I do this checklist every single time. Do we have displacement? Have we manipulated some high? Are we in a higher time frame gap? What gives me actual confidence that this trade will actually work, right? So for example, we had this change in state, inversion, higher time frame gap, manipulation, and obviously we understood where the sell side of the curve was. So this trade ended up ultimately working out, and this was super clean trade. So understanding what aligns with your higher time frame, what aligns with your internal time frame, those are things that are going to help you. But the ultimate thing is displacement and understanding why we swept certain liquidity. So this is something I want you to pay attention to, right? So we need to understand, and this may not be your problem, this may be your problem. We need to understand, what am I viewing the market to? Am I viewing it on what I want to see, or am I viewing at what's actually happening? Because a lot of the time, and this happened to me, pre-market New York, anticipation's building up, and I'm super antsy to take a trade. And so I'm idolizing the idea of taking a trade and having the correct draw on liquidity, because usually I find myself having the correct draw on liquidity, I can just always get stopped out and I never can actually have the trade. So this idolization of me having this draw on liquidity, this trade actually working out, it makes people too antsy to take a trade and it be correct. So you need to kind of hold yourself back, understand, look at the market, what is happening right now, what is happening in this moment, and should I actually take a trade or should I just wait patiently? Because a lot of the traders are super antsy. They want to click the buy button because they're so scared of the market leaving without them. Like, the worst thing that will happen to you if the market leaves without you is you preserved capital, you didn't lose any money, and you'll just wait another day. And a lot of traders can't even do that. They can't wait a single day without taking a trade. And the ultimate goal for waiting for confirmation, and I can't fix it for you, you have to just have discipline and patience on the chart when actually looking for something. Because when I was younger, when I was starting out trading, I was so antsy on to take a trade. I was wanting to click the buy button so bad because I saw this buy side that looked perfect, and I would click it just to get stopped out and then the trade run in against my favor. So obviously understanding this makes trading so much simpler. Having a confirmation, having a step-by-step guide on how to actually enter, it's just going to make your life easier. And especially as a trader, your life's already hard enough. So just make it easier for yourself. If this helped you, click subscribe. I post live NQ and ES trades every single week. So I want to know in the comments what you wait for before you enter, and I'll see you all in the next one.